In this week's video, I'd like to talk a little bit more about long-term care insurance. There seems to be this lingering question surrounding whether the premiums that you might pay into a long-term care insurance policy are deductible or not, as well as whether the benefits that you might pull out of a long-term care insurance policy are considered taxable income or not. There's some confusion in this area, so I'd like to dive into this topic specifically for business owners and non-business owners. Well, let's start with the deductibility of premiums you might pay into a long-term care policy. There are two kinds of long-term care policies. One is considered tax qualified, one is considered non-qualified, and that's an important distinction. There was a piece of legislation passed in 1996, after which most of the policies that you'll see on the market are considered tax qualified. There are a few out there on the market that are non-qualified. For your tax qualified plans and policies, if you're an individual, you can deduct long-term care insurance premiums subject to certain limitations. The limitation is that the deduction shows up as an itemized deduction on your federal tax return, and it's subject to the 7.5% of income, adjusted gross income floor. So what that means is that if you have $100,000 in adjusted gross income, and you itemize your deductions, meaning the total amount of your itemized deductions exceeds the standard deduction that you're given for the year, 7.5% of your adjusted gross income is $7,500. Long-term care premiums are considered an unreimbursed medical expense. Medical expenses are subject to this floor. So that means that if you have $10,000 of medical expenses for the year, you get to deduct everything over $7,500 because that's the amount that's over 7.5% of your income. So long-term care insurance premiums are deductible in that sense. That being said, most people are not paying more than 7.5% of their income for their policy. So in order to deduct them as an individual, you probably need some other medical expenses for it to make sense. Now, if you own a business, the game is a little bit different. If you're the owner of a pass-through entity like a sole proprietorship or an LLC or an S corporation, you can deduct as a business expense premiums that you pay into your own personal long-term care policy up to certain limits based on your age. In 2022, if you're under the age of 40, you only get to deduct $450 a year. If you're between 41 and 50, you can deduct $850 a year. 51 to 60 goes up to $1,690. 61 to 70 years of age, $4,510. And if you're over 71, or if you're over 70, I should say, the maximum is $5,640 a year. Now, if you're the owner of a C corporation, you can deduct everything without an age limit, which is really pretty convenient. So again, the answer differs depending on whether you own a business or not. If you don't, you're subject to the AGI floor. If you do, it depends on your age and the type of business that you own. Now, are the benefits that you might pull out of a policy tax deductible? Again, depends on whether it's tax qualified or not. Assuming that your policy is tax qualified, assuming that you've had it since 1996 and your policy is in the vast majority of options that do qualify for this favorable tax treatment, money that you pull out of the policy will not be taxable as income. When you pull the money out, you'll get a 1099 at the end of the year, but it won't be counted as taxable income. I should say that on the market, there are a lot of hybrid policies, which are a mix between life insurance and long-term care, or maybe an annuity and long-term care. When you take distributions from those types of policies, the life insurance portion that you might take out could be considered taxable income. It's the long-term care benefit that you pull out that's considered income tax-free. So there's a lot of complexity with regard to how things are structured, but by and large, your tax-qualified core long-term care plans, long-term care insurance policies, I should say, when you pull out money for benefits, it comes tax-free. Hopefully this was helpful. Talk to you all again soon.